Last month on the Tom Taranto Show, we talked about insuring the home of your dreams. Today, we're talking all about the money. We have with us a special guest. It's Bryan Troy from the mortgage firm in Melbourne Beach. Thanks for coming out, Bryan.
Thank you, Tom. I appreciate it.
So Bryan is a loan officer, so why don't you tell me a little bit about what you do?
We take a buyer that is ready to buy a house and we do full pre-approvals for them, walk them through the process from A to Z, and hopefully close on time and have clients for life.
Excellent. Now, we were talking about some news, some changes that were just recently with FHA loans, so that, what do you want to tell us about what happened?
Sure. Last month, FHA did a little bit of analysis of their book of business and realized that they might have some extra risk that they weren't anticipating in regards to high debt to income and low credit scores. Right. So we get updates from Fannie Mae, Freddie Mac, typically quarterly, and they'll make those updates. So Fannie will come out to us and say, hey, starting on this date in the future, here's what's going to happen. Well, these became retroactive, meaning you could have pre-approved somebody through FHA, and based on the new rules the middle of March, you had to go back in and look at that file because it would no longer qualify. And what they were looking at specifically was the combination of high debt to income ratio and low credit scores. Yeah. And those are the files that might have worked 45, 60 days ago that are no longer going to work.
Okay, so there's people maybe out there with that pre-approval letter in their hand that don't even realize that they're not qualified for that loan at this point.
Not maybe, for sure.
For sure, okay.
Because what happens is, if you're doing a full pre-approval, not just a pre-qualification, that lender should be running that file through an automated underwriting system, okay? Right. That is going to spit out an approval and tell us yay or nay. Well, I had 3 or 4 files personally that were yeses 60 days ago, and now they are no longer yeses based on this new guidance. But a lot of lenders are not letting their buyers know that. They're not going back through their pipeline. So the buyers are completely unaware of this. And you have a lot of buyers walking around right now with pre-approval letters. Unbeknownst to them, they are not in a position to buy a house anymore.
Interesting. So, and of course, that would be a big headache if they spend a lot of time looking at houses, making an offer, and then they find out later that they're not going to necessarily get that house.
Well, huge domino effect. I mean, not only do they not know, now you're taking a house off the market.
Right.
That house you're taking off the market, they might have a purchase contingent on them selling that house. So it trickles down for sure.
Yeah. So what would you say makes up a good loan officer? What is the characteristics of that?
Probably a lot of the same things that make up a good realtor.
Yeah.
Attention to detail, number one. Being a professional, knowing your guidelines. I mean, it's very easy to pull somebody's credit, ask them how much they make, and say, yeah, it looks good. That is not the heart and soul of a real pre-approval.
Right.
As an example, I ask somebody how much they make. I make $60,000.
Yep.
A pre-qualification or an online system where you do it yourself is just typing in $5,000 a month.
Yep.
Okay. As a real loan officer that digs, I say, how do you make that money?
Right.
Is it salary? Is it hourly? Well, no, Bryan, it's commission. Red flag.
Right.
How long have you been getting the commission? Oh, I just started this job.
Right.
That's going to be an issue.
Yeah.
Bryan, it's salary. I've been doing it for 5 years. I've been with the same company.
Yeah.
That's great.
Yeah.
That's what we're looking for. And not that commission or bonus or anything like that is bad. We just have to document typically a 2-year continuance of it. So what I do is a little more complete than what some other people do.
Yeah.
We're running the automated underwriting systems. We're looking at the documents to make sure what they're telling us is factual.
Yeah, and that particular element, I think, is what's really important for a real estate agent, whether you're the buyer's agent or even the listing agent. When we see a pre-approval from a company or a specific loan officer where we know that there's a good chance that they haven't asked those extra questions, that it really might not be worth the paper it's written on, that this pre-approval letter. So
a lot of times.
Yeah.
Another thing we run into is if it's an out-of-state lender and they're plugging in property homeowners insurance on their pre-approval and they're from Pennsylvania, there's no hurricanes in Pennsylvania.
Right.
So their quotes are always going to be very low. So what I find is when I plug in the actual numbers, a lot of times they're not going to qualify for the amount that someone else told them. But meanwhile, you've spent the last 3 weekends showing them houses in the other price range.
Yeah, I've had cases where their actual employment currently is in another state. They're shooting to buy a house in Melbourne, And the question is, did you get relocated? Where in this area? And the answer is they didn't get relocated. They might have some. They might be thinking of working remotely.
We have a lot of that. Now, remote employees is very easy, okay? Meaning I can work out of my bedroom, I can work out of my house. We get a letter from the employer stating that living in a certain geographic area is not a requirement.
Right.
That's easy. When they're transferring to a physical office, it brings up different guidelines. It's a little bit different depending on the loan type. The rule of thumb is we want to see them have one pay stub. That's not always possible because they want to come down and close on the house as they're starting on the job.
Hotel while they're,
That can happen. We've got more I's to dot and T's to cross. And again, it's different with conventional than it is with VA, etc. So that's one where you really need to know your guidelines, because the last thing you want to do is tell them to sign a contract with a closing date that we're not going to be able to meet. And now we have to go out and go, we got to wait another week for that pay stub.
So if they're moving to a different company, is it helpful that it's within the same industry that they came from, and that they have some verification that they did get a new job in the area?
Same line of work is big for almost all the loan types. So as long as it's the same line of work and as long as it's salaried, we're typically not going to have too many issues. Now, if we're counting on overtime, bonus, etc., we could have some issues there because we really don't have a baseline to go off of how much overtime or commission they're going to be making.
Right. And what about people who are self-employed? They have a 1099 instead of a W-2.
Sure.
And I've understood that is more difficult. What is the requirement for that?
Well, it's funny you mentioned that because Tuesday I had 3 people call me in one afternoon that had been pre-approved by another lender that were all self-employed that had not supplied a single tax return to the other banks they were talking to.
Yeah.
That's impossible.
Yeah.
We're going to do a 2-year average of what they make on their tax returns. So there are certain things we're adding back in, there are certain things that we're reducing from their income, but it's all about the tax returns.
Yeah, and I think that what a lot of self-employed people do is they find a lot of deductions, so their actual net income is very small.
Absolutely.
And they're not thinking in terms of buying a house, they're just thinking of taking these deductions.
Sure, and I get a lot of people that think they don't have any usable income, but they've depreciated $100,000 worth of heavy equipment, which we can add back. That becomes usable income.
Yeah.
And I have a lot of other people that think they made $100,000, but they've got a really good accountant, and by the time it's all said and done, I can use about 10,000 of it. So
exactly.
It goes both ways.
Yeah, and we talked about the 3 major types of loans: conventional, FHA, and VA.
Sure.
We know that in the real estate industry, a lot of times agents will shy away from VA and FHA, feeling that it'll be stricter, more difficult, more time-consuming. What are your thoughts on that?
So lots and lots of misconceptions out there.
Yeah.
People think that a house with a lot of issues, they're going to rubber stamp it and approve it just because it's a conventional loan, and they're going to kill it because it's a FHA or VA. That's really not true. Yeah. FHA is probably the strictest, but only in regards to the roof.
Okay.
VA dictates reasonable amount of time left on the roof. That's typically looked at as 2 to 3 years. But you have to understand, if there's no visible leaks, staining, etc., it's probably going to be fine.
Yeah.
Now you go to the other end of that spectrum, and you have a house that's a basket case that clearly needs a new roof, and even if our appraiser doesn't call it out on a conventional loan, probably not going to get insurance on it.
Right.
I can't close the loan without insurance.
Right.
VA takes a really bad rap because people think there's extra expenses that the seller is going to have to pay.
Right.
I ask in those cases, can I please get the listing agent's name and number? And I call them and I explain, your seller will have no extra cost, because a VA is the best kind of loan there is for the veteran. I mean, lower interest rate.
So what are the interest? Yeah, the benefits for the veteran.
Lower interest rate, no down payment, no mortgage insurance.
Yeah.
Other than that, not much.
Exactly.
So.
Well, and a lot of times they ask to get some seller's concessions from the seller, so it is almost nothing out of pocket.
Absolutely.
Which is, I mean, how can you beat that?
You really can't.
Yeah, that's interesting. And then there's some differences in terms of the mortgage insurance. What are the differences with an FHA and a conventional, for example?
Okay, so PMI or private mortgage insurance, in almost all cases except the VA, if you put less than 20% down, you're going to have PMI. There's 2 kinds of mortgage insurance. There's borrower paid and lender paid.
Right.
So if you see some advertisements on TV, 5-10% down with no mortgage insurance, more often than not, it's smoke and mirrors.
Yeah.
It's going to be a LPMI or a lender-paid mortgage insurance, which simply stated is a higher interest rate.
Right.
They pay it out of that.
Yeah.
The reason I don't prefer that and we offer it, the higher rate is for the life of the loan.
Yeah.
The PMI on a conventional loan is for a couple years or until you can demonstrate 20% equity.
Yeah.
Okay. Now with FHA, the PMI is going to be for the life of the loan unless you put 10% down or more.
Okay.
If you put 10% down or more, it will drop off eventually. With FHA, the PMI is the same amount per month regardless of what your credit score is. With a conventional loan, it is very credit score and loan to value driven. So somebody with an 800 credit score that's putting down that's putting down 15% instead of 20,
Yeah.
that mortgage insurance can be very cheap.
Yeah.
Somebody with a 640 credit score that's only putting 3 or 5% down, it's going to be cost prohibitive, and we're probably going to look at an FHA loan for that one because the PMI is going to be cheaper.
So what are some reasons that somebody would choose FHA? I know that it's 3.5% down. Are there other reasons why someone would be forced to go FHA and couldn't get a conventional?
Yeah, so FHA is just a little more forgiving loan type. So if we've had some credit issues in the past, such as a foreclosure, FHA, it's a 3-year waiting period.
Right.
Conventional is 7.
Yeah.
Okay? So we do a lot of FHA loans for people that have good established credit with a decent down payment. They've just got some credit event in the past that's prohibiting them from going conventional.
Okay.
FHA is going to be more forgiving in regards to credit scores.
Yeah.
The rule of thumb that I use is when you're over 680 credit score, okay, we're going to typically look at a conventional loan. Once you start dipping below that 660, 680, we're going to look at FHA. Now, if you've got 660 or 680 and you're putting 20% down, clearly we're going to go conventional.
Yeah.
It will approve loans with lower credit scores and higher debt to income ratios, but 3.5% is your minimum. It's also going to allow the seller to pay almost all the closing costs and prepaids.
Okay.
But we do have conventional products with as little as 3% down.
Right, and I know that traditionally in the past it was like maybe a 10% or a 20% with conventional, and people can get 3 or 5% today.
3, 5, 10, 15, your choice, yeah.
Okay.
Now, those are slightly harder to qualify for. So the person with a 780 credit score, we can probably get them approved at a higher debt to income ratio than the person only putting 3% down.
Okay, interesting. So if somebody's in the thought process of, I might want to buy a house in 2019, what are some no-nos, things that they should not do?
One of the biggest challenges we have is when people start moving large sums of money around that we can't source. So there's nothing illegal nor wrong with keeping money in a safe at home. In the industry, we call it mattress money.
Right.
If somebody calls me, and that's why the sooner you do a pre-approval, the better, because someone will call me and say, hey, I have $10,000 in a safe at home.
Yep.
The first thing we're going to want to do is get that money in a bank and seasoned. Seasoned is the term.
Yep.
Okay.
How long is that?
Typically 60 days.
Okay.
There's not many situations where we're going to need to go back more than 60 days on the bank statements.
Okay.
So the first thing I tell them to do, go get the money in the bank. You have all sorts of weird situations. I lent my cousin $5,000 last year. He's paying me back.
Yeah.
We want to get that stuff out of the way.
Do they have to explain where this money's coming from, where it originated before it went into the safe?
Once it goes in the bank, we don't care as long as it's there for 60 days.
Once it's seasoned, they don't have to explain where it came from. Okay.
Because that's the issue with cash. You can't really explain. You can explain where it came from, but there's no paper trail.
Right.
You can't prove it.
And you don't know that they didn't go to a loan shark.
Correct. And the other thing is, we're under the watch of Financial Enforcement Crimes Network, anti-money laundering, FBI. I mean,
Criminal
you name
things,
it.
yeah.
So they're trying to weed out that sort of stuff, and
Yeah.
really they just a lot of times make it hard for honest people that work hard to get a loan. No new credit.
Don't go out and take any credit. Now, sometimes people slip up because they're going to be checking out at Best Buy or something, and they get offered, or at the retail stores, oh, you get a savings if you take it on the credit, and then they just basically affected their credit. They took out a new line of credit.
That is going to affect their credit negatively. Now, your person with a 780 credit score, do we care if it dropped to a 770? No. But your person that had maybe a 605 credit score and that drops it below 600, that could be the kiss of death. So as a rule of thumb, we don't want to see people obtaining any new credit, new inquiries, etc.
Yeah. What would you say to somebody who, maybe you're talking with them, they're like, well, I don't want you to pre-approve me because I talked with another lender, so I feel I'm just going to stick with the first one because each new person that I talk with, if I'm interviewing loan officers or lenders,
Sure.
that's going to drop my score. Does it impact them seriously?
It can, but as long as it's within 30 days, no. So if someone else has pulled someone's credit 2 weeks ago,
Okay.
and it's for a mortgage,
Yes.
and then I go and pull it, my pull is not going to affect it negatively.
Okay.
So what I tell people is, as long as it's in 30 days and it's for the same reason, it's not going to affect it. Now, if that person comes to me and I pull it for a mortgage, then they go shopping for a new car and they pull it for a car. Those are all different reasons.
Yeah.
One's going to be an automotive pull, one's going to be mortgage related, and then they go down and look at a boat. That's going to be a recreational vehicle. Those are all going to affect it. So I
And
just
it would be
explained
exponentially negative. I mean, that you're now
each one of those is going to ding you because you're looking at 3 different items.
Right.
They have it set up so when somebody's doing a mortgage look, they understand they're not trying to buy 2 or 3 houses.
It's okay to shop between
exactly.
different lenders if you want. Okay. Yeah, and I know that's sometimes I get a little resistance when we encourage someone to switch to a lender that we've had very good experiences with. They're resistant for different reasons, but one of them is that they're afraid that they're going to hurt their score.
Absolutely, and I explain all that to them and try not to be pushy. Like, if you want me to, I will, but I also explain to them there's a lot of sellers locally that have been burned by certain lenders.
Yeah.
And if they see a local person with their name on that pre-approval letter and there's multiple offers, they're going to increase their chances of getting that property exponentially.
Yeah.
So even if me pulling them, their credit dropped their score by a couple points, it's probably better off.
It might make the difference between them getting it.
Exactly right.
Well, I know that for a fact, that there's certain lenders that the agent and the sellers, we knew that there's horror stories with that particular lender, and they actually said, "I'll take your offer, but I want you to use, some good local lender," and the buyers are willing to do it.
Well, I mean, I can tell you a horror story.
Yeah.
Based on that, I had a gentleman that came to me through a realtor, and he said, I've used an online lender, I've done a pre-approval, I don't know why my guy wants me to use you so bad. And I told him, I said, look, I'm going to need your tax returns, your pay stubs, and those things. Well, if he'd already been pre-approved, he'd have all those together. So he hadn't supplied those. Right. So the realtor, who was a friend of mine, spent the next 3 weekends showing the guy houses. Yeah. In the meantime, he still hadn't gotten me his documents.
Right.
One of the questions we ask, along with bankruptcy questions, et cetera, is, have you ever had a deed in lieu of foreclosure?
Right.
He told me no, unequivocally. I've never had one. So I filled it out. 3 weeks later, he brings us his documents, and one of the last documents in that stack was paperwork on a deed in lieu of foreclosure. Right. My heart dropped, and I said, oh my gosh, did he answer yes? And I clicked the wrong button. I called him back. I said, sir, I asked you about a deed in lieu of foreclosure, and I thought you said no, but I might have made a mistake. He goes, well, I did have one, but they told me it wouldn't affect my credit, so I answered no.
Right.
I said, well, you're going to have to wait another year to buy a house. And when I called the realtor, I thought he was going to wreck his car because he had been showing him houses for 3 straight weekends. And that's the difference between a pre-approval and maybe going online and doing a loose pre-qualification.
Yeah, and I know that's a big thing for us as agents, is that we want to know that if it's a pre-approval from Bryan, this is real. They've asked those questions.
Sure.
And in other cases, we're like at the appraisal stage, a week and a half before closing, and we find out financing failed. We ask why, we hear the story, and it was like, that should have been a question that was asked the first day when they talked to the loan officer, and apparently we're figuring it out later. It's crazy.
I mean, 98 times out of 100, that is an absolutely true statement. It should have been discovered in the pre-approval phase. Absolutely.
Yeah. And some buyers actually are frustrated with the fact that they're having to go through so much detail early on.
Yes.
And we emphasize that you want to know now whether you're going to be able to do this. You don't want to spend money on inspections, appraisals, and then find out very late. And, and the emotional taxing of having picked a house, written an offer, and then find out you can't get this house.
Sure. And the FHA stuff we talked about earlier, if you're going to find out if one of these fail, it's probably going to be a couple weeks after you've signed loan application and it gets into underwriting, and they rerun it and they realize, no, that's not going to work.
Right.
So yes, you're protecting the buyer's money because we don't want them spending money on inspections. We don't want them spending money on appraisals.
Yeah.
And I personally would rather spend my weekends with my kids and my wife instead of showing somebody properties or doing something like you on a loan that's not going to close.
Absolutely, absolutely. I had a listing where we were set to close, and the couple went out and bought 2 brand new cars, one for him and one for her, to go with their new house and their 2-car garage. And we get up to a call from the loan officer, this isn't going through. Like, why? Well, they went out and bought 2 brand new cars
Sure.
to go with their new house. The only thing is they didn't get the new house it's because it didn't work. I had another lady who went and got new furniture for her new house, and she bought it on credit. She didn't listen, or I don't know if she was informed. She got this whole set of furniture, and then it dropped her debt-to-income ratio, and so she didn't get the house. They said, you don't qualify for the loan anymore. So she wanted to return the furniture back to the furniture store because she had it stored in where she was living, and her dog had chewed on the sofa. So they said, you can't return this. The dog's already chewed on it. So she's stuck with this
That's a good
no
story.
house and furniture that was chewed by her dog.
Instead of the dog ate my homework, the
And
dog ate my couch, and I couldn't give
it's
it
crazy
back.
stories, yeah.
Yeah.
What are your thoughts about the economy in our general area? I know that we're seeing interest rates actually went back down.
Yeah,
recently.
absolutely. The trend has been downwards recently as far as interest rates go. Last year was a pretty drastic run-up
Yeah.
from January 1st of last year through about Thanksgiving.
Yeah,
So I jokingly tell people, when rates used to be in the 3s, it didn't matter what came after the decimal. 3.7, 3.6,
Yeah.
3.8, everybody was happy. As soon as it was 4, it was a big deal. And last year, we actually notched over 5%
Yep.
for a few weeks right around Thanksgiving.
Yeah.
And it really put a little bit of a chokehold on our market here as far as sales
Yeah.
and time on market. Now, this springtime happens to coincide with rates coming down a little bit, so I think that's really spurring some activity.
Yeah.
Because remember, real estate is seasonal.
Yep.
So seasonally, November's not our busiest time, and that's when the rates went to the highest. So everybody's like, uh-oh, what's going on
no,
here?
it was
But
slow.
I feel like things are normalizing now.
Oh yeah, everyone I talk with is booming.
Yeah,
Title companies, other agents, it seems like the ones that want to be busy are busy.
sure. And I mean, it depends what news source you read. You got to be careful who you trust when you read the news, because there are certain people that are always going to call for a recession within 6 months.
Yeah.
There are people that are bullish and always say it's going to keep going for another few years. So nobody, in my opinion, really knows that stuff. Now, I look at supply and demand. I mean, that's the basic driver.
Right.
And the other thing that I think really, really affects home prices as much as anything is it cheaper to rent than own?
Yeah.
Because as long as it's still cheaper to buy a house than rent it, why wouldn't we keep selling a lot of houses?
And as long as we can afford it with our incomes in the area, yeah.
Exactly right. So wage income is up. This area, I believe, is insulated pretty well with your companies such as Grumman, Harris, Embraer, SpaceX. I mean, we really have a unique situation here. And if you look at our housing prices here compared to Miami, California, and some other places, I think it's still a pretty good deal
Still
here
affordable.
personally. So that's
Yeah.
my opinion.
And all of the experts that I've listened to about when the next recession will be basically give us that the 2019 is going to be a good year. The next recession, a lot of them were saying it's either 2020 or 2021. So we're looking at next year or the year after. But a recession's going to come. It's not a question of
Sure.
if, but when. But we're looking at what we've seen is more of a deceleration of.
I was going
of
to say
the
there's
price
different
increase.
levels of recessions.
Yeah, and
you know?
and the likelihood is not that it's going to be a housing crisis. It's just going to be a contraction after
Sure.
the expansion. But
And I agree with that. And Fannie Mae, Freddie Mac, they come out with their reports every year. Everything I'm seeing says we're going to be at or above the level we were last year.
Yeah.
And I think if everybody keeps selling the same amount of houses they did last year, we'd all still be happy.
Yeah. Yeah.
I mean, I feel like it slowed down a little from 17 and 18, but still a very healthy market.
Right. Yeah, and I think that as far as real estate agents, loan officers, anyone who really wants to can have a really good year in 2019.
Oh,
just
absolutely.
looking at what we're dealing with. So.
Last year I got back to old school business tactics a little bit more, trying to sit with every client versus sending them an electronic loan app. So we could do a whole show on that.
Yeah.
But it's all about customer service.
Yeah.
Because if a realtor refers a client to me and I do a great job and I close on time and they write me a raving review,
Yeah.
that just leads to future business.
Yeah.
Because they're going to tell their friends, their coworkers, their families. So when you have that I just went to a closing this afternoon. I try to attend all my closings.
Yep.
I think that stuff's really important.
Yep.
Because that whole online lending thing where you just hit a button and you're good to go, none of that stuff is happening there.
Yeah, it's a lot about relationships, and with the development of technology, it's pulling it away, and to have a professional that people can work with makes a big difference.
I think a good parallel is travel agents.
Yeah.
Okay? If you're just flying to Sheboygan over the weekend, you're going to go on Expedia.
Yeah.
But if you're booking a real vacation, there's still a need and a want for a travel agent, somebody that's
something
done
complex.
it, been there, and can plan it out. Well, that's us, you and I. This is not the trip to Sheboygan. This is, we're going to Africa. We're planning a safari. We want to talk to an expert.
Yeah.
And as long as you're an expert in your industry, I think the sky's the limit.
And I think it's an interesting relationship, and it doesn't matter whether I'm the listing agent or the buyer's agent. The loan officer that the buyer selects can either, even if it closes, can still leave a very good taste in their mouth or a very bad taste in their mouth. And we have no direct financial benefit from which lender they choose. If it closes, it closes. But we always want them to have a very good experience with all pieces of the puzzle, and that's the title company and the loan officer. And I know I've had great experiences with you through the years. So
I appreciate it, and that's why I try to tell people: look, this online lender you talk to out of New York or wherever, they're not here. Okay, they're not in a position where you can come and sit down and talk to them.
Yeah.
And if it doesn't close on time, and you go spread the word that they're not very good, it's really not going to affect their business that much.
they're another state. Yeah.
Brevard County's really little.
Yeah.
And if Tom Taranto goes and tells people that Bryan Troy did a bad job,
Yeah.
I mean, the writing's on the wall.
I
So
have
can't
5,000
do a
Facebook
bad
friends.
job.
Exactly.
Right.
Yeah. And I think, I tell people when I'm trying to get them to encourage them, and I might give them a couple different people, say you can choose from these ones, but I've had very good experience with these loan officers or these lenders. If they ask me, there's a group that I would strongly recommend you don't go with because of all sorts of bad nightmare situations. And then there's a whole bunch that I just don't know. I would still rather choose the ones where I have had good experiences myself. I've heard all sorts of good experiences from other people, as opposed to the unknowns, and definitely not the ones where it seems to be a nightmare every time.
Well, I think half the time you call me at night, I'm still at the office at 7, 8 o'clock. I mean, that's how I built my reputation is customer service and making sure I deliver on what I say. So I take it seriously. And it was hard work to get there.
Yeah.
And that's why I tell people, look, some of the big banks, they've got an 800 number. And if you do a bad job, the 800 number is still going to keep ringing.
Yeah.
Whereas with me, I don't have the 800 number. I have word of mouth, referrals, past clients, and people that trust me to do a good job.
Yeah.
So that's why we put the extra effort into it.
Yeah. So it's not just about getting it closed, which is extremely important, but making it a nice experience along the way. And
Absolutely.
that's good. If someone who's watching or listening wanted to get a hold of you, how would they get a hold of you?
Best thing, call the office in Melbourne Beach, 321-914-3596.
Do you want to say that one more time?
321-914-3596, and ask for Bryan.
Sounds good. All right. Well, thank you very much for coming out here, Bryan. I really appreciate your time, and it was great talking with you.
I appreciate you having me.
All right. Thank you.
Thank you.